Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at the SPDR sectors within the SPY. It is Wednesday morning, 5:40 a.m. on September 22nd. Okay, what I'd like you to do, I think you get more use out of the video if you write down. I'm going to call out the levels for you to alarm in your system. And even if you don't trade these sector spiders, I think it's a good idea to have levels alarmed in your system for the simple reason that, if you're interested in, quote, the market, SPY is the market, then SPY is made up of all its component parts, right? And so we're experiencing this downturn or period of weakness. You want to know what sectors are emerging on a potential turnaround. So I've got the materials here up on the screen. If we get a cyclical upturn, the reopening trades, trades tied to the actual economy, that kind of thing, you'd expect materials to be in a group of stocks that are moving higher in that environment. So if you're sitting there studying your charts and the alarm goes off in XLB, and then 15 minutes later you see or get a trigger on industrials, so you're going to start getting a picture of, wow, these cyclical sectors are starting to move higher as opposed to the other ones. So let's go through this. And I think one of the things that might be productive for you is, when I show a chart in your mind, it should hit you like within 5 seconds. Wow, I want to own that, right? We've all been there where we've seen a chart, even if we don't call ourselves out as technical analysts. A good chart when you see it. So when I go through these, see if there's anything in here that you say to yourself, man, I really want to buy that. So let's look at it. XLB, materials. These are your copper miners, lithium, all that kind of stuff, gold miners. RSI, bearish regime. PPO, bearish regime. Price, under all the fast moving averages, the 8, the 20, and the 50, sitting right on the 200. So why don't you alarm 78.70 or 78.50, whatever you prefer, and then 80. You get a breakdown below the 200. I mean, that is the definition of the stock is no longer in an uptrend, right? As long as you're above the 200 day, looking at a long-term chart, you can say the stock is in an uptrend. Once it loses the 200, by definition, it's not in an uptrend anymore. So we're at key support. The 200 doesn't get any more important than that. So alarm the 200, alarm the bottom of this gap at 80, and then if it breaks up and fills this gap and starts heading higher, we'll know that. Communications, basically a proxy for Facebook and Google. Here, 44% of the index. I want you to take note of something. RSI dropping down below the 50 for the first time in a year. And if you want to go back even farther than that, I think you'll find that it's even longer than that. So something's different, right? We were in an up channel until we weren't. Now price is below all the moving averages, the 8, the 20, and the 50. and we're down below this resistance level. And so I think the immediate things to alarm are 82 and 80 spot 50, 80 and a half. And so if you get a breakdown below 80 and a half, the next level of support is 78.50, and then you got the 200 coming in at 76. So, when you look at this chart, do you say to yourself, oh my God, I got to get that? I don't think so, right? You might say, oh, I think support's going to hold here. And you can look at it that way, but it's in a bearish setup. You've got momentum dropping down below the zero line for the first time on the chart, going back in all of 2021. You got bearish RSI, and you got price below all the fast moving averages. So that's we got to wait and see mode. Energy. Interesting chart. Why? Because oil's at the highs. Oil's at $71. Why are energy equities down? We got price trading in this range between, let's call it 46.25 up to 49.50, and we've got price below the midpoint of the consolidation range here at 48, and we've got price below all the fast moving averages and just more or less tagging and sitting on the 200. So basically 3 levels to alarm. I would alarm 46.25. I'd alarm a midpoint of that channel just as a heads up at 48. And I would alarm 49.50 for a breakout of the consolidation range. That would be a place where it would get interesting. But I've been wondering about this for a while with all the ESG buzz and mandates with hedge funds and all that kind of stuff. Maybe there's a large contingent of folks that just can't buy it, can't buy the equities, no matter what the price of oil is. But you'd certainly expect with oil near the highs to have a more compelling chart than this, because it looks like it's, rolling over. RSI bearish, PPO moving up to the zero line and starting to roll over. Remember, in past videos, if you've been with me a while or a student of my work, you know that a very bearish type setup is when you get a rally in momentum below the zero line and it comes up into that zero line region and then starts to roll over. That almost always bodes negatively for the stock. And it's just like the opposite when you're in a nice uptrend. If you go back up here, you had a momentum reset coming down to the zero line, got right here, and then you got the bull cross, which corresponded to this pullback to support and then a ramp back up. So when you're looking at momentum, fixate most of your attention to that zero line for either resets at zero above or rolling over while below. And so this bear cross here, if it happens, would probably point to lower prices. And again, if we got a break of the 200, if we got down trading in the 46s, you got a big void down below where price could move relatively quickly. XOP is the Exploration and Production ETF. This is going to be all your smaller drillers. When you look at XLE, ExxonMobil and Chevron are about 30% of that ETF. It's cap weighted. This is much more balanced with smaller drillers in the mix. But here too, I mean, it's a better chart than XLE. Why? Because price is above the 50-day moving average. But we've got oil at the highs, but price not even really close to the prior highs back in June. So I think the level to watch is 90 on a breakout. I think you should have an alarm there. And since it's sitting on the 50, I would set an alarm just below at, say, 83.75. If it loses the 50, then you're going to come down here and you've got another level, the 200 at 77.50. Set an alarm there. For the reasons that I've already said, once you lose the 200, I mean, there's not much else to say except probably get short. Financials. Same theme. RSI breaking below breaking below the 50 point, puts it in the bearish mode. You've got PPO rolling over, just starting to break below the zero line. You've got price that just recently gapped down below all the fast moving averages, below the 8, the 20, the 50. You've got a gap above. I would alarm 36.75, and I would alarm, let's say, 35.75 down here. It's kind of in a precarious posture here because, and you know what? Why don't you go ahead and set an alarm at 36.50 as well? Because if it can't get into this gap, I think you're going to start seeing some downside here, and this would be a relatively tight entry. What you could do is get short and have your stop just inside the gap, and then just stay short financials and see if you don't get a move down towards the midpoint of this consolidation range, and then possibly even down to the 200 in the days or weeks ahead. Here's KRE, the regional banking ETF, all your smaller banks, banks that don't have trading desks and all this ancillary worldwide income. These are your domestic retail operations, much more tied to interest rates and traditional banking. So we've got KRE basically sitting on the 200. So I think you should set an alarm at 61. You get a break below that, I think you're coming down here towards 56. And if you're the kind of guy that wants to buy the 200 and see if you don't get a bounce there, that's perfectly fine as well. I mean, you're at a very objective spot on the chart, and you're just looking for a move back up to the top of the range, up towards 67. Kind of like what we did the last time we visited this area. See, price even dropped down, got a nice bounce off the 200, and then back up to the top of the range. So if you wanted to give that a shot, it's certainly an objective place. But all things considered, things are pretty weak at the moment. I mean, industrials have just fallen apart. Bearish RSI, bearish PPO. I mean, we were breaking out 2 weeks ago, and now we're making a dive to the 200. I think this line in the sand here at 98.75 is an important level to keep price in this value range, like between 99 and 103.50, kind of keep it, contained. But then you've got the 200 coming in at 97. I would have an alarm there for sure, because if you, like I've been saying, if you break the 200, then things fall away pretty quickly, and that's the moment of truth on the test of a 200. Really, the best looking chart that I can find is actually the most important one, and that is XLK technology. It holds the biggest weighting in the within the spider, complex within SPY, and then of course you've got this closely linked to the Qs with a lot of the same components within it. So very important for technology to hold it together. Still within the channel, but testing the lower side and below the 50. I would put a big alarm at 152, and I would sit up in your chair if 152 breaks, because then you're looking at 148, and if that doesn't hold, you're making a dive down to this 142 level, which was like one of the original breakout points back here in the spring. You can see resistance, bottom of the channel up to resistance, and then finally a breakout. So it's going to be really important right here for XLK to keep it together, get a nice bounce off support in the lower side of the channel, and then make a move back up. And you're always welcome to alarm the 50 EMA, and I would just set it at 154. So it's in a very narrow band right here of support and the 50. So, if we can get a bounce above the 50, that would be really helpful. Staples, XLP. You'd think a defensive sector, when there's market weakness, you'd expect a defensive sector to do better. But, again, the chart does not look that compelling. We lost this breakout at 71. We came back to test it, which is fine. Breakout back test. Came back up to the highs, but then have since rolled over and now kind of below everything, below the 8, 20, and 50 day, and in between support and resistance here in this zone of value. So I would set an alarm at 71, and I would set an alarm at 69.50. And if you didn't even want to bother with that, I would come down here and alarm the 200 at 60, just call it 68. And I realize a lot of you guys don't trade a lot of staple names, but it does include a name like Walmart and Procter & Gamble and all those names. So some big important companies in there. I'd like you to kind of keep track of staples just on a read of, a defensive sector. So those are where I would set yourself some alarms. Healthcare is one of those interesting sectors. It's both defensive but kind of offensive at the same time. It's a big component of SPY. So here we are. We were in a nice rising channel, but we've since broken out. Price just a little bit below the 50, but sitting on a key level at 131. I would set an alarm there. And hey, if you're bullish the market, I mean, this is an objective level to take a long right here at 131 and see if you get the bounce. But price is still below the 50, and you can set an alarm there if you want at 131.90, 131.90 for the 50 EMA, and then support below at 131. So it's going to be make or break here in the next few days, I would think. Moving on to consumer discretionary, another big sector. Amazon is cap weighted 24% of this index, so pretty much the dominant player. It's hard to get XLY to go up if Amazon is going down. So we can see right here, we had quite a few runs at 184 to break out. Could not do it, gap down the other day. And now we're very much like healthcare, sandwiched between the 50 right here at 180.76 and 180 support. If you lose 180, I think you're going to come down to 176 rather quickly. And while we're at it, we can also set an alarm in this gap at 180 spot 75. If we can get a break into that gap, 181.75 on the gap entry, and then fill that gap, and with any luck, break out if the market firms and gets back on track. Here's home builders, which is a part of discretionary. Had the run up in the spring, pulled back, the 66 level, toggled for a double bottom, got this ramp up into 74. We were kind of thinking it would break out here, went the other way, came back, gap down, and you can see that price has been pinned under the 50 for looks like almost a couple weeks here. So now we're down below this level here at 69.75. I would set an alarm there. And then you can mark the 200 at 66. And you can see from the chart, 66 is going to be really, really important. But I mean, home builders look weak, below all the fast moving averages. So, there's not a lot to shout about. Bearish PPO, bearish RSI. Until these can flatten out and turn around and head up, there's a good chance that this drifts lower down into that 200 area. And then let's wrap up with XLU utilities. Again, doesn't get any more defensive than this, yet it's rolling over as well, dropping out of this rising wedge below all the fast moving averages, 8, 20, and 50. So, I mean, I don't know if there's, I don't really have a good alarm level here for you. Let's just alarm the 50 at 67. And then you can set an alarm at 64 for the 200. So 67 and 64, I think, will be good levels for you to be aware of if and when price gets to that point. So let's wrap it up here. Let's just do a little summary. SPY is the market, but the market is broken up into its constituent parts. If and when the market firms up and rotates higher, we want to be on top of what are the groups that are moving the market higher. Where's that leadership emerging? Is it going to be in cyclicals? The energy names, industrials, financials, those kind of names? Or is it going to be in tech? Is it going to be mega cap tech, ARC names, bubble names, software names, that kind of stuff? It'll make a huge difference in our positioning and, coming out of whatever kind of swoon that we're in right at the moment. So let's leave it there. Hope you got something out of the video. If you're new to the channel, thanks for stopping by. There's more headed your way. So to get that information easily, hit the subscribe button and the alarm bell. And if you want, go over in the show notes. There's a link there where you can drop in your email on the registration page at the website. And that way, whenever I publish content, morning, noon, or night, you will get it in your email box. And you'll also have an opportunity to join our trading group that continues to see vibrancy and growth. And we'd love to have you. And longtime listeners, thank you so much for the support. Let your friends and family know. Pass the link along. Maybe they'll benefit from the work as well. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.